Sharing my screen. Let me know if you can't see the screen, but there it is being shared. Right, let's get into this market. So what's gone on overnight? I don't have a Scooby-Doo, but let's have a look. We had UK data. So that's good stuff. And we have an hour and a half until PPI and Michigan sentiment much later on, in a few hours' time. Those are the red calendar events. Right. So, how was cable impacted? Bit of a bid, in line with correction in the dollar. Okay, good stuff. Coming up into our zone of interest for shorting. Right, well, let's stick with US yields for now. So we had that 30-year auction yesterday, following a relatively in-line CPI report from the US, which initially had the market thinking or de-pricing a interest rate hike from the Fed next meeting around. So the market is more on the side that the Fed is going to pause and skip a September hike. But then there is a majority, it seems, in the market that feels that the Fed is not done hiking. Or I wouldn't say a majority, but there's certainly a significant um, sentiment there for continued hikes at some point. And then we had Fed's Daly come out and talk about those CPI readings, which probably also gave the dollar a boost, when she said that um, essentially it's not all about one data point. As she said, there's still more work to do, and how the Fed is committed to bringing inflation down to the 2% target. Um, so the combination there, and also when you look at the divergence between the UK economy, for instance, the US economy, so I'm reading a message coming in. The divergence theme, sorry guys, the divergence theme is still alive and kicking. I mean, between the European Central Bank, for instance, uh, the Bank of Japan, maybe not so much versus the UK's Central Bank, Bank of England. But the theme is there alive and kicking, and that is underscoring the dollar. And it's very hard to keep the dollar down, given its status as the world reserve currency. And when SH1T hits the fan, which is inevitable in terms of global growth, with China there in a disinflationary environment, ongoing political angst with Russia, Ukraine, China, and the rest of the world, essentially, trade ongoings and so forth, the US dollar stands its ground. Now, also, I've been educating somewhat on the day count, this 3-day cycle, which the sooner you guys grasp it, the sooner life will be a lot easier in assessing the market in terms of a directional bias. And this is a phenomenon in the market that doesn't work 100% of the time, but it certainly can help with aiding you with a directional bias and scouting out your trade setups for the session that you're in. So staying with that, let's look at these yields. So we've come up and we are consolidating high up with prospects of a continuation, given that we've broken out of this trend. So we'll give this a green dotted line to indicate that we are on the backside of that prior bearish trend. You've got this peak formation down low. That was the 30-year auction burst out of consolidation up into the prior month's highs, taking on resistance. And we've got a geometrical shape forming here, which may indicate a continuation. That's a continuation pattern. Audio bad. Yes, it's always bad. My computer has a very loud fan. It's a very powerful machine. It's a gaming computer. And unfortunately, there's not a lot I can do about it at the moment. I'm in the throes of getting a microphone so that we can sort that out. If there's no screen, try disconnecting and reconnecting to the to the event, to our meeting. If you go away and come back, that seems to work out for people. I've moved a bit closer to my computer. It's Friday, so I was kind of leaning back a bit there. And in terms of the 30-year US, well, we're looking at that at the moment. So we got that auction yet. There was a move up in these yields on the back of the auction. I mean, the details, the demand was very solid for 3-year notes, but there was softer demand for the 30-year bonds at a yield of 4.189 versus 3.91 at the previous auction. So that's realised a rally in yields. Yeah, because there's an in. So why would you? So would you advise taking trade? It's worth checking all the bonds. Um, Interest rates, the money markets are the driver. They are the core driver of currencies. So it's always good to note what demand there is for bonds and the interest rate outlook from the central banks, because they can be at the core of movements in the currency market. So yields, essentially, what the market is saying is that they expect higher rates on a 30-year basis. But what was being offered yesterday. So there was little demand for those bonds, which drove the prices higher across the board in yields. So on the screen, I'm going to go to the 30-year. So we've got that very large move, which trickled down into the 10, 20, and these are more associated with Federal Reserve interest rate hikes. So the 2-year tracks closely sentiment around what the Fed is about to do because it's on a near-term basis. So so it's important to keep an eye on these auctions. So with the dollar, where are we? So yesterday we were talking about, and I put out a couple of videos, one at the end of New York. What I'm finding is it seems to be worthwhile to do this meeting at the end of the day, and we can go through your questions specifically about the currencies that you traded or what you're looking to trade, or gold or the indices, S&P and so forth. And we can spend time going through that. And then I can do a later video that assesses the entire board, which I've got here, which what I look at, for a directional bias for the day ahead. So there were 2 videos that were put out, and the second of which I went through these setups. So anything drawn on these charts was essentially what I did yesterday. So we were looking for a day 2 continuation trade. Yes, Davs, that's right. Okay, if you see just 2 blue squares bouncing around, try disconnecting and reconnecting. Okay, sure. All right, guys, if it's not working, I apologize. I don't know what more can be done. Um, so let's jump to the. Well, I'm on the dollar now. Can you see the dollar? You want me to? So if it's not working, I guess I can do a screenshot. If you watch the video from yesterday, the market watch list, I put it out yesterday in Asia. I put it at everyone in Discord. It's also on my YouTube channel. If you're not assigned to my YouTube channel, why not go there, subscribe? These videos are put there for you guys to pick up on. So try and make use of it there as well. Let me see. Here it is. I'm going to put the video in this chat. Here it is. Okay, essentially, from what I'm seeing today, what we talked about yesterday in that video is essentially what we're just going to go over it again today, but see if there's been any developments and any prospects of a trade setup on the back of our bias. So our bias was for a correction in the US dollar. It was already starting to do that, and we've seen some progress in that correction, but the overall bias is higher. Okay, so we're looking to stay long and short of anything else versus the dollar. That's essentially what the theme is. Now, bearing in mind, of course, that this DXY index is not directly is not a direct hedge against, say, dollar yen, which only has a 14% or 15%, I think it is, weight in the basket of currencies. It's more, I mean, the euro dollar is much more heavily weighted. I think it's up to about 47, 46% in that basket. So, but it does give us a basis, right? Looking at this dollar index, and we can note that the weekly template is pointing to a continuation to the upside. Right, we've got longs that came in the market, and they've broken structure over here, and therefore we're in anticipation of a continuation to the upside. It's a disappointment that we didn't get more of a correction, because the more correction we get, the less likely the trades would move against us, given that it's already done its correction. So there could be more correction to come. Um, so in that regard, we're currently offered, as we come out of the London session, or the bulk of it, and we move towards the New York Open, as in terms of currencies. So we're still some way off from the data that will be out in about an hour's time. The first tranche of data, and then that comes ahead of the Wall Street Open. And as I said, the nearer we get to the Wall Street Open, the more volume and prospects of a trade setup will arise, and the further away we get, the less so. Having said that, lunchtimes have been pretty busy in the New York session. We've had some big movements at around, I think, 1 p.m. this week. So interesting to note that. So will we see a continuation in this correction of the dollar, or are we going to see a rally? We don't know. But I'm hoping that we get a bit more of a correction. Perhaps the data will flush out some of the stale stops, and then we can progress to looking to be long of the dollar later in the session. Okay. What was what random? Yes, Dali spoke yesterday. Comments came out from Dali. Well, I've touched on that already. She said she basically underpinned dollar strength with her comments. We also had, who else we have? We had Bostic speaking. There was nothing really from him. I think Harkin was supposed to speak. I didn't catch if he did say anything. But nothing really. I mean, these Fed speakers, from time to time, they can impact when the market is extremely indecisive. But I think the market's already made up its mind. It's already priced in to the market. You know, we've had softer jobs, inline CPI. We've got an unemployment rate which is not far off its lows at 3.5, according to the last non-farm payrolls result. Um, so again, we're data dependent, guys. Right, moving to gold. Was it random that Delhi spoke? Oh, I'll have to look into it. Um, I don't know where she spoke. I don't know if it was on a TV interview, perhaps. A press. If she wasn't slated on the FX calendars, let me look into it now. Um, it's like she was speaking. She was speaking to Yahoo. Yahoo. I think she was just randomly interviewed by Yahoo by the looks of things. Okay. Right then, this gold. So gold has an ATR of around $18, $19, 18.50. It's done about $9 on the bid so far today. Will we have a drop of $9 to the downside? The day cycle says yes. We've had the correction up that we were talking about yesterday, right up into our target area. Some of you might be short already, I'm not sure. Let me know. But that was the call. It said a push up into trendline resistance and banking on dollar strength. And in that regard, with yields as high as they are, the prospects of a continuation with the yields on the bid, and that is not going to bode well for the price of gold. So if you're trading gold, it can be volatile. Have your stops in place, make your trade plan, be okay with a loss if you encounter a loss, and be satisfied with a win, but don't celebrate. Just treat it as part of trading. You win and lose. You want your winners to run, cut your losses, and move on. Learn from them. What can you do better next time? But with gold, it looks pretty well set up, and it's in this continuous bearish trend. Got a report out of Commerce Bank. They're saying, what are they saying? EFT investors in particular are on the retreat due to the outflows that begin in June. The holdings tracked by Bloomberg have meanwhile dropped to the lowest levels since the spring of 2020. We believe that the gold price will only recover in any lasting fashion once an interest rate turnaround is clearly foreseeable. In the meantime, we expect prices to trend sideways. Well, we have our targets set at 1911, 1907, and 1902 on the downside. Now, in terms of a setup, if you're not already short, then what we need to be doing is I'll go to a different chart for this, cleaner chart. So we're on day two. Day two is a continuation scenario. So what we've got here is a market that has come up into resistance. It's tapped into that high and it's starting to decelerate in its correction. If we come down to a lower chart, we can identify the market structure, and I will pull a trend line onto here. It's not the cleanest of structure, so I'm going to come into a 5-minute chart, try and identify right. Well, this wick, it's a shame we had that wick because we could have had our structure right up in here. Right, so we just need to be okay. So I'm going to put our structure at the base of this candle because that seems to what to have driven the rally. Now it hasn't been broken in any significant form, so those that are short do note that that market can continue rising, but the bias certainly is to the downside. We have lower highs and we just need the dollar to perk up a bit, maybe a pop in yields, maybe the data is going to be the catalyst, and we want that structure to break. That's confirming our thesis for the downside, and we'll be looking for a short. Now, noting this structural point, these lows, this can be an area of support. We could blow through it entirely, we don't know, but just be cautious of that area there. Seems to have been resistance over here as well. Yeah, let's wait out. Let's wait for the PPI data to come out and see where the dust settles and what setups we can find after the data. Was the action yesterday really a game changer in terms of the dollar part of the story? I think more of the same than anything else. I mean, it was highly anticipated data, of course, but given that there was no real um, variation to what was expected, a little bit softer by a tick or two, was it, on the yearly, in line on the monthly. Um, it's not really, I mean, it really just confirmed to some that the Fed is likely to pause next month, but that was already priced in. So looking for a break of structure, potentially a move back up into um, this volume area before collapsing. That's quite a common theme when we get these breaks of structures. We get a move out. A lot of people chase that break and get caught out as the first mouse, and you get the cheese later on by being patient and letting the market break down and then take the explosive parabolic move later on. So a way to go about that would be if you don't want to miss out on what could be potentially the move, you can edge into the trade. Allocate what you decide that you want to risk percentage wise of your account and start feeding the trade with portions rather than just going all in at once and then find yourself stopped out and then only see the market go where inevitably it was going to go without you. We're talking about shorting gold because not buying it, shorting it. So we're in a market that's trending up, and it can still trend up, Malik. I'm not saying that it can't, but the bias we've got our directional bias from the 3-day cycle. So if we come back, the 3-day cycle is telling us that shorts are in the market. They're dominating. Right? Yesterday we got this move that broke structure over here, so it broke support, and naturally, because the market was displaced, it's coming back up to fill orders, and then in anticipation of the continuation lower. Right, so these bids are coming in to meet the offers, and then we're expecting a overwhelming presence of supply that will continue to push the price in the direction that it's been going since, well, way back late July. So this is an ongoing trend, and we're just seeing if we can't milk something more out of it for a test of this psychological number to the downside and last month's lows. Does that help? I can't see the screen though, so I'm going to give you a screenshot, and if you can't see the screen, try disconnecting and reconnecting. Here's a screenshot of the gold price, and if you look to yesterday's video, this is also discussed in here, and I'm doing a recording of today's watch list, which I will post shortly afterwards. Okay, so we can move on to the euro. So we've got what we expected out of the euro. We've seen a correction. So far, it's an inside day. We're inside of the prior day's range. Some of you caught this sell-off yesterday. Well done for those who did. So we've had a rise, a fall, and we're coming back up ahead of the data into the highs of the day. So a retest. We'd like to see a retest because that means that if we are coming down, we're unlikely to come back up again, or we may do, but hopefully we'll have a lower high. And the next retest, let's come out of this indicator, which shows the inside day, so we can see the candles. So we've got that M formation that we're coming back up into, test the neckline of it, and we can expect a rollover on dollar strength. Now, this has consolidated above yesterday's closing price. And if we do get a breakout, we have stops to target on the downside. So low-hanging fruit. Someone asked me, what does that mean? It's essentially, where are the stops? And 109.34, and then the last week's lows near 109, 109.13ish, 109.12 on the downside. So in line with the bearish trend. So that is the thesis for today. The continuation to the downside. Again, data dependent probably to break us out one way or the other, but the overriding theme is a stronger dollar, central bank divergence. You're welcome, Malik. Welcome. Sterling yen, no, the stops are just eyed as when you have a market that below swing points, so lows and highs. So, for instance, here, um, stops would have been above here, above here. As the market moves, you've got traders selling. So, if they're selling, where are they likely to put their buy stops? So, their stop losses. They're likely to put them above recent highs and recent lows. And what happens is the market tends to gravitate towards those areas only to reverse, ironically. So, in this move yesterday, what might have happened is as the market moved up, triggering buy stops, so clearing positions off the table and gravitating higher to fill orders higher up, sell orders. So you're triggering buy stops, and then you've got breakout traders as well coming in, new money. So all of that is sort of a perfect storm for a continuation. And then you're clearing stops from up here as well with that spike. And once those orders, the sell orders are all filled and they override the longs, you get a weight of supply forcing the price lower because people have run out of, they're not buying. There's no demand as high as that. So the price comes back down to where the demand is. So on the way down here, we can move into sell stops, which can drive the price lower until we meet demand for the price to move back up. Um, your question there, Maria Ramos, I would. Yeah, I mean we're sort of range bound here. What I was looking for was I was hoping for a bit of a, well, we might be getting it now, a stronger correction before the next move up. I'd like to see a stronger correction before the next move up. But there's nothing to do until the data comes out anyway. There's no. We're just eyeing up what possibilities there are. Sterling yen has obviously done well on the back of the UK data. Now, what may be happening here is maybe we're setting up for a short. We are on day 3, right? We've got a lot of length already built up in this market, And generally, what you can see in the 3-day cycle is a sell-off and a move into the length that's been building up over the course of the week. So it's Friday, Wednesday, Thursday, Friday. That in itself is the 3-day cycle. So Wednesday, Thursday, Friday sell-off. And we're also naturally in the 3-day cycle. 1, 2, 3. And then if we pull our chart out to daily, we can see that we're coming up into last month's highs. Maybe we're triggering stops currently. Maybe we can go a bit higher. Maybe we can go much higher. But my best get is that we're coming up into stop territory and we're looking for a pullback. If we measure that correction, we've come up to the minus 272. Maybe you can't see that so well. Not that one. Where is the... Yeah, that's right. Okay. So the minus 272 is bang on that month's high. And we've come up into that. There are prospects of a test of 185. That's some way off. But in order to get there, we probably need a pullback. So I'm biased on the downside, letting this market play out, and then I'll be looking for the deceleration for the sell-off. Let's go to US 30. So the US 30, we were looking for this correction, which we've got, and we're looking for a continuation to the downside. This is day 2, so day 1 shorts in the market. There are shorts in the market taking control, and we're looking for a continuation to the downside for the time being. Lower highs. We've got what looks to be like a strong stop hunt, fueling prospects for a much lower index. And you've got all the way down here as a target on the swing. And for a day trade, the ATR, the average range on any given day over the last 14 days has been 300 or so points. And as you can see, we haven't really done much so far. 100. So there could be another 200 points in the offing to the downside for today, potentially. All right, guys, so I'm going to wrap this up here, unless anyone's got any questions about any specific currencies. But essentially, we are in line with our watch list from last night. Again, I will put this in the channel. S&P, we're exactly the same. Same scenario. Same scenario for all of the indices. They are the same setup. Not a problem, all good. Right. Good stuff. We're getting a bit of a pullback in this US dollar, which is what we want to see. And that's going to set us up at higher levels to be shorting versus the dollar. So maybe we're getting a bit of a final clear out here, guys, of stale stops ahead of the bigger moves that we might see later on in the session. What was that? We had a big move here somewhere. Euro yen. Well, Euro yen is a broken down market, so that looks pretty hot. So there could be an opportunity there, guys, in Euro yen. I'm going to put that right up here. Looks good. So as you can see, it's breaking down this trend. So this is now a bearish, broken down trend. And the high was, which one was it? This one here, right? So the higher low responsible for that will be all the way down here, and we've literally just taken it out on the hourly chart, which is very good news, because on the 15-minute chart we've got a series of closes perhaps there. One close, right? So we've got a close in the 15-minute chart below there, and we're coming back up into this volume area. And we're looking for continuation in the breaking down of this price for the short. So we're going to wait for the data to come out and see how the land lies after it. We'll monitor it for a good 15 minutes and see if there are any setups across the board. Okay, fantastic. That's great stuff. Right, guys, let's close this down. Roll up your sleeves. Data coming up. We've got 41 minutes. That gives me enough time to get this video out to you. Thanks for being here, and I'll see you in the Discord Ask Our Analysts section. Good luck today, guys. Remember, it's Friday. End strong. Ahead of the weekend.